Has your mortgage payment gone up recently?
Hey, and I had a 30-year fixed rate. What the heck is going on? Hello everybody, my name is Barry Horvath and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us again. So, mortgage payments are going up. We get those phone calls a lot, right?
Yeah, why did my payment
My payment's
go
gone up. You told me I had a fixed rate. How come my payment went up?
Yeah, I had a 15-year, I had a 30-year fixed rate.
One of two things happened.
Okay.
Your insurance went up, or your taxes went up, or maybe even a combination of both.
Yeah, because as most of you know, your insurance and for most of you, your taxes are included as an escrow in part of your mortgage payment. So it seems like common sense to us.
Yes, you have a fixed rate, and your principal and interest has not changed.
Nope, it has not. But taxes inevitably have gone up. Hopefully you have a homestead on there and you're under the cap, so it won't go up too much. But right now we're seeing a huge increase in insurance premiums. So that escrow account comes up short, and guess what? Your mortgage payment's gonna go up because you don't have enough money to pay that increased insurance premium. And for our buyers out there, oh my goodness, what does that do to them and their buying power? That could be yeah, we'll talk about that in a
That
minute.
will affect it. So, last week we had Angel Cook on the show from Leaders Insurance who talked to us about the pool of money, almost like a savings account. Well, your escrow account works the same way. It's a little savings account that they pay your insurance and your taxes from. So what happens when your insurance hikes up or your taxes and now there's not enough money? Well, it's like a savings account and you just overdrew your savings account, right? So where does that extra money come from? That's why your payment went up.
Yes, so we are going to bring back by popular demand Angel Cook, and I know she's out there.
Our dear friend.
She's so smiley
so
and
happy.
chirpy. She's always happy. I mean, do you ever have a bad day, Angel? I don't know. Don't answer.
Bad moments, not bad days.
Bad moments, not bad days. That's good.
I like that.
As I'm sitting here thinking about her medical stuff, and she just wore heels for the
It's a
first
bad
time
moment,
last week.
We've had a lot of let's just rephrase that word bad. We've had a lot of challenging moments in the mortgage industry lately, and they're just moments. So
In the world, we've had challenging moments.
No kidding. Yeah, we've been through
in the last year.
Yeah, so right now we are in one of the hottest housing markets. And Angel, we wanted to bring you on because we know Angel is an expert in the insurance arena. She's very well respected in this community. She has been writing insurance and been in the industry for 20 years now. Oh my goodness, can you believe it's been that long? We've been friends a long time, Angel, so it's great. She's with Leaders Insurance, and we thought, you know what, we're trying to figure out what's going on. We're not experts in that. We're experts in what we do. At least we think we are anyway, but
we are.
We're well educated in what we do. So we wanted to bring Angel on to update us on what's going on in the insurance world as far as premiums. I know, are you seeing some increases at all?
Yes.
People are calling us complaining about their escrow.
I will say I'm after hours, I spend anywhere from 3 to 4 hours re-shopping my existing clients, not writing new business,
Oh
not bringing on new
my
people.
gosh.
Something that Leaders Insurance does, and we're very fortunate, is we're an independent agency. And so I don't have just one company. I have multiple companies that I can shop my clients around with. And so it is my job. I take that on to say, you know what, this person, I have a report and it downloads and I can tell who's taken rate changes. And so I pull those clients and I reshop them with other companies. It is a very rough time right now when typically I see a rate increase. I can say, oh, no problem. I'll just rewrite them. And I can keep my client pretty stable at a decent rate that they're used to paying. They still get the good coverage that they need, and we can keep them at that better premium. That is no longer the case. What used to take me about 15 to 20 minutes to quote one home now takes me about 45 minutes for one home. Why is that? Because the property insurance market has changed so drastically. Our underwriting has changed so drastically. This year, 2021, I can't memorize all the company's changes. And so I have to stop and go, wait a second, this person's roof is 7 years old. Oh, wait, this company won't take it now. This company won't take it now. Wait a second, it's a tile roof. Nope, they don't take tile roofs anymore. Wait a minute, their hot water heater hasn't been replaced in the last 15 years. They're not eligible. There are so many factors now that it takes so long to do the right thing. And my clients are upset. They went from a $800 a year premium to anywhere from an $800, so double, to $1,000 rate increase in 1 year.
Wow.
1 year.
Yeah, that's crazy.
And many of my clients are not catching it until their escrow hits and their mortgage payment went up. Exactly like your teaser said.
Yeah.
Everyone needs to know you get, even when your insurance is escrowed, you get your renewal 30 to 45 days beforehand. Look at it. Look at it.
Sadly, I think so many people just, oh, here's the insurance thing, and they put it in their drawer because they know it's included in the mortgage. I don't have to worry about that, and they never even open the envelope. I, myself, am totally guilty of that.
And what people don't know is in the escrow world, right? And this is terrible when I have to say this to my clients because it's always too late. But I always try to educate them with an escrow account. Escrow account is in the past. So you need to remember that. So if you pay this year $800, that's what your mortgage company thinks you're going to pay next year.
Yes.
And so for this full year, they take that $800, they divide it by 12. That's what they're collecting every month. And then a year later, your premium comes and it's now $1,800. Not only are you short $1,000, guess what? They need to increase it for next year. So they're taking $1,800 divided by 12. But wait, you owe them $1,000.
Mm-hmm.
Now they're collecting for $2,800.
Right.
And you know what?
Think about that.
We talked about last week why all that was happening because we were grateful to have you as a guest on our show. And we got so much information from it. We wanted you to come back. And we did talk about, you know, the false claims with the roofs going on, which is appalling to me, but from the hailstorms, you know, the fraudulent claims. We talked about Hurricane Michael.
Which was 3 years ago,
yeah,
and that's the other thing people don't understand.
It's a trickle-down effect.
Yeah.
And these escrow accounts are kind of robotic, you know. People don't understand that. They think, you know, there's no real human touch to that because they don't know that the insurance premium's going up. All they do is automatically adjust it, and like you said, you got to catch up. So somebody's mortgage payment can go up significantly from that rate increase, and they don't understand why that happens.
So one of the things we probably should educate people, I'm going to start adding this into when I'm, you know, talking to somebody about a new mortgage.
DeLynn has a spiel.
A spiel.
She
I'm
has
going
a
to put it in. And I'm sure you already do, Angel, is to tell people, you know, when you're paying it at the closing, when you're buying this house, you're paying for 1 year. So 11 months from now,
Yes.
contact your insurance person. If you don't see something in the mail, contact them anyway and say, hey, what am I looking at, so that they can make some adjustments right then and there. right?
Yes.
That's probably
Absolutely.
a really good advice, I would think, that we can start giving to people because of what's happened. Now, you and I were talking off air. This is just this year. So this is just since February, I think you said, that these
Yes.
astronomical. So one thing that people probably don't understand is, so if Hurricane Michael, what you told us last week, was a big cause of what's going on, why did it take this long for it to catch up? I'm curious.
Well, because there are reserves. Each insurance company has reserves, and we have our co-insurance, right? Each insurance company has their co-insurance company that's behind them, backing for the other portion of those monies. And so, first of all, Hurricane Michael was very difficult because it did hit the Panhandle. They are on the water. And so was it flood or was it wind that took the building down? They have to determine that. And so that takes time, especially when it's catastrophic.
Gotcha.
Those houses were removed from their slab.
Yes.
Wow.
Yeah, they were
It was
gone.
devastating. It's devastating. And it's not like, if you go somewhere and you're like, oh, I'm going to pull out $100,000. You can't just do that, right? So there's all that paperwork behind the scenes, too, that you have to cover. Also, when you're doing a full payout, it's not just the value of the house. And so if your house was insured at $200,000, but your property, your contents was $100,000, your loss of use was at $20,000, that all gets added up. So that claim is now a $320,000 claim. Okay, that gets paid out, minus your hurricane deductible, right? But it all takes time to get that all out. All those people were relocated. They had to leave. They couldn't just come back to their houses. They weren't standing. So some of them had to move out of state. Some of them had to move across Florida and totally relocate. So you have to find all those people. You have to get through all the red tape and all of that. It takes time. It takes time. And there were a lot of different insurance companies that insured up there. And so getting those all paid out, and then also, and this is terrible because when you lose your home, it's so personal. And so you don't agree. No, I want more. I know that I was only insured at this much, but I want more. The problem up in the Panhandle is they were on the water, and a lot of those homes were older. You can't just rebuild them because now FEMA is in effect, and you have to build them up. And if they didn't have enough ordinance or law coverage on their policy, they're not going to get enough to rebuild. And guess who's taken the insurance companies to court because they're upset because they can't rebuild their house because they didn't buy enough insurance. It's a problem.
Wow.
And that's why it's taking so long.
So is there a lot of pending litigation going on with this that's ongoing?
Many, thousands.
Thousands. So these premium increases we're seeing in the insurance industry could be forthcoming for years to come because some of these things are just funneling through.
Yes.
So my next question was going to be, do we see a decrease coming up? And I guess the answer to that is no.
No. We are really pushing for some stability.
Yeah.
But I don't know if that's going to happen. And this is just me, my disclaimer. My prediction is that insurance companies will stop writing. And we will head back to everyone going through Citizens.
Wow.
I expect that to be the next 2 years would be my prediction. Wow. Honestly, my gut says it's going to be 3. I hope I'm wrong. But I do think that we're going to be back to where we were in 2008, having to go back. Because if the state does not back the insurance companies and gets this under control and gets some help, then insurance companies will have it's a business and they will have to cut us off. And that is their choice. They can say, we're not going to write anymore. And I predict that is what will happen. And to be honest, I'd rather that happen than see my clients paying $4,000 a year for insurance.
Right.
If we have to go through Citizens, then we go through Citizens. It's not the best option, but who can afford $4,000 a year?
But what is Citizens going to do? And then, then of course it goes back to, well, then where's the state going to get the money? It's...
Mm-hmm. So one thing about Citizens that a lot of people don't know is they are a nonprofit.
Oh, I did not know that.
Kind of like us,
Yes.
DeLynn.
Yes. Yes. So they're a nonprofit. And so all the other insurance companies are a business. But Citizens is a nonprofit. And so the premiums are real premiums. They're real premiums. That's really statistically what they need to collect to be able to stay solvent.
And they are a little bit higher, or historically a little bit higher than the other insurance companies as well. So hopefully it won't be $4,000, but it's certainly not going to be $1,500 anymore.
Yeah.
But I will tell you right now, DeLynn, they're coming in about 20% less than the standard companies right now.
Really?
Really?
Yes.
Wow.
Because remember, they're nonprofit.
So can you, Angel, tell us what are you seeing in average of an increase in premium? I know you deal with many different carriers, but what's the most common that you're seeing?
I will say the most common range is in the $700 range.
So
I have had extreme.
$700 increase over the prior year.
Yes.
Wow. Wow. That's
the lowest I have seen. The lowest I have seen is just on Monday. On Monday, I saw a rate increase come across, and this is terrible, but I saw it come across and it was $338. And I remember it because it was so low.
You were excited
and I went,
about that.
Oh my God, this is great. And my poor client was like, what? But the highest I have seen is $2,800 rate increase, and I saw that last week come across.
$2,800 increase. Oh my God.
And what is it, like sectors that you're seeing? Is it more homes on the water? I mean, do you remember you were talking about back in the 2000s, you remember the whole flood fiasco with flood premiums did? I mean, I had people selling their houses because they were like, I can't afford flood insurance anymore.
I know.
Kind of
So
like
this is interesting. I'm so glad you asked this. It is in sectors. That is what I'm seeing. And guess where the areas are?
Where?
You will not guess it. So I'll just tell you.
Yes.
It's in the zip codes that have the most roof claims.
No way.
Really?
Really?
Not
Because
surprising, I guess.
They are expecting a claim because they see a trend that this street all had new roofs. This street all had roof claims. And so they're going up. It's only a matter of time before it gets to that block.
Wow.
And if we're going to have to pay for a new roof, we're going to collect the premium.
That's your neighborhood.
I know it's
You
my
said you
neighborhood.
got them in
they
your
knock on my
neighborhood.
door. I want to pull up. All right, I'm not a violent person, but when I see these guys come knock on my door and I see all the roof signs,
You want to punch their face?
it just infuriates me because they are impacting the real estate market, the insurance industry, our livelihood, you know, the
Right.
title business, everybody. If premiums go to $4,000 a year, like you said, a lot of people will be knocked out of being the difference of them buying a home or not buying a home and
Yes.
becoming a renter. We need people to own homes. That's the
Absolutely.
lifeline of our local economy. People are improving their houses. They hire landscapers. They go to Home Depot. They buy supplies. They get things remodeled. They're adding pools. If people aren't owning homes, it's just going to stifle our economy. Sorry.
They
but
can't afford it
It's a
because
rippling effect.
the insurance is so high.
Yes.
You know,
Yes.
they have to also buy a lot lower, a lot less.
Yes.
You know?
I had a roofer knock on my door too, and you know what I told them? I'm a PNC agent, and they went, "Oh, sorry to bother you," and turned around and walked away.
And that's
And I just stood there going, "Please don't go to my neighbor."
Yeah.
We just need to run them off. So we need to get the word out that, you know, insurance fraud is on the rise, and it's not
Yes.
okay. I mean,
No.
I want to sleep at night. I don't need a free roof to not be able to sleep for the rest of my life.
Right.
That's just not worth it to me. And people doing that
I know.
it's actually really sad when I think about what they're doing. But Angel, thank you so much for joining us again. You're always a wealth of information. So check out.
Thank you so much for having me. You guys are always amazing to be with, and I learn a lot on the mortgage end too.
Yeah. well,
And I
it's-
learned so much from you every time we talk. Thank you.
Yeah, thanks for joining us. That's Angel with Leaders Insurance. Wow, it's almost infuriating.
It's scary what she just said, you know, and I know she said that she's hoping she's wrong, and I'm hoping she's wrong too, but you know what, if the premiums go up that much, you know, that's going to, like you said, that's going to, one, either knock people out
Right.
of buying a house at all,
Right.
because they can't afford that. Because keep in mind, the first year's premium has to be paid at the closing. That's the way it works. So all of a sudden people are thinking, oh my gosh, closing costs are $6,000. That's a lot of money. Guess what? Now they're going to be like $9,000,
Right.
you know, because that insurance premium has to be paid up front. So, and people just don't have that kind of money.
Nope.
You know, some people just don't have that kind of money, or it's cutting into what they can afford.
Well, here's the thing. Prices in real estate, no secret, have gone up significantly. The prices continue to rise. If insurance premiums rise, it affects your debt ratio. That's part of how we calculate what you qualify for a mortgage. It will push people out of the market. In fact, we did a calculation, DeLynn, yesterday, if you remember. If your insurance premium goes up, and at the average rate that people are paying today for a home mortgage on a 30-year fixed rate, if that premium goes up $100 a month, which is $1,200 a year, which
Right.
she's just saying she had won $2,800
Right.
a year, it knocks their buying power down by $22,000 of purchasing power. What does that mean? That means that house you qualified for on a mortgage payment for $250,000,
Yeah.
now you only qualify for $228,000 on the same house. Because
That's it.
as
So
lenders,
you can't buy that $250,000 house anymore.
and people have to remember, you know, when we pre-qualify people, we are qualifying people on total payment. You make this much money, you have this much in debt, we qualify you on the full payment. Now, while we can guess on a rate of the mortgage, and we can guess on the insurance, and we can guess on the taxes, until you identify it, we don't know those numbers. So when
Right.
you get into a specific property, you may or may not qualify. And these higher insurance premiums
Are going to really hurt things.
Yeah, they could.
tremendously. I always tell people, you know, pre-qualifying, oh, well, you know, this other online mortgage company said that I was pre-qualified for $350,000. Okay, but this out-of-state online mortgage company, what are they using for taxes? What are they using for insurance?
Yeah.
We don't qualify. It's not an exact science, I tell people. We don't qualify for a dollar amount. Oh, you can go all the way to $350,000. No, we qualify you for a payment. This is the monthly payment that you can afford.
And we're guessing at the other
Estimating, because if you don't have a house yet, we're estimating what are the taxes going to be on that house that you haven't found yet? What is the insurance going to be on that house that you haven't even found yet? We don't know.
So can I, you know, we haven't even touched on this, but HOA fees also are
There
part
you
of
go.
that payment. So here's something that I've seen going, like I'm a board, I know, shocking that I'm on a board for
That
an
you're on the
HOA.
board of your HOA.
I know, shocking that I'm involved in something. But, you know, we've had several claims because electrical damage, we've had vehicles run into our gate, we've had all kinds of weird things kind of happen.
Wow.
And then, so we've had claims with our insurance. So guess what? The premiums have gone up. So when the HOA insurance premium goes up for the association as a whole, guess what that means? That means
So do your
ultimately
monthly HOA
our
fees.
HOA dues. Again, it goes back to,
Angel savings account.
yes,
Right?
qualification is based on payment. So if those HOA fees go up because of these increased insurance claims, then it's inevitable that you're going to qualify for less, or
Right.
you're not going to be able to afford the home. And I know home ownership's a
that's
great thing, and you want to lock in on a fixed rate and a fixed premium, but if
And
these-
that part's easy.
Yes.
We got you there. But there's nothing we can do about the change in taxes and the change in insurance that sadly has been coming on really heavy in this last 6 months.
And I know Angel did touch about in insurance, you know, on the flood premiums. You know, we know it's hurricane season right now. It's a concern. You have to remember, FEMA is who writes all of your flood insurance, okay? And there are private sectors that you may be able to save money on. But if you are an FHA home buyer, you cannot enter into that private sector. They do not permit it. They do not allow it. you must use FEMA. So whatever the FEMA rate is what you're paying. So if you're buying in a flood area on an FHA purchase, that is something to take into consideration. You cannot get into that private sector and maybe get your payment down. So keep that in mind when you're looking at buying your home. So.
And as Angel said, as far as flood insurance goes, first of all, we're all in a flood zone. We live in Florida. The whole state is in a flood zone. It's just a matter of the elevation. So you'll hear people talk about, do you have an elevation certificate? That is what's going to tell them what zone you're in and how much the flood insurance is going to be. And the other thing, and I don't know if Angel mentioned it or not, but I definitely wanted to tell people because I think this gets confusing too. Flood insurance only covers you for rising water only.
Right.
So it's not the water that is falling from the sky. If your roof leaks, that is not flood insurance. That's your homeowner's insurance. But if the water's coming down so heavy and so hard that the storm sewers in front of your house can't handle it, and it starts to back up, and comes into your house, that is covered under flood insurance. And as she said, which I thought was really interesting, a couple of years ago when we had that storm Debbie come through the middle of Pasco County, 70%, I think she said, 70% of the claims were people who were not in what was a required flood insurance zone.
Yeah, we didn't even touch on any of that.
I know.
Too.
They didn't think they needed flood insurance.
Yeah.
I'm in an X zone, I think it is, or whatever. I don't have flood insurance on my house, but I should. I absolutely should. Like she said, $300 a year or whatever it is could save you thousands and thousands of dollars. It's really a no-brainer.
You know what? My advice to all of our viewers is go ahead and get a review with your agent, whoever they may be.
Absolutely.
Update that yearly. You know, check
about
in
a
with
month
them.
before your
Make
policy
sure you're
expires.
working with a local, competent
Yes.
agent that's a professional and knows what they're doing.
You know,
and
some of
can
these
help you.
online companies, even insurance companies have them. You know what? They're sitting up there in Hartford, Connecticut or whatever. The insurance it's the insurance capital of the world.
I know.
They're sitting up there. Are they down here in the hurricane with you? No.
No.
Shop local.
Yeah, there you
That
go.
insurance person is going to be right here with you buying water at the grocery store as the hurricane's coming.
It's true. It's true. Wow, so much great information, DeLynn.
Yeah.
I know we haven't talked about upcoming dates, but real quick, I just want to mention a couple things.
Lunch and
because
Learn.
We do have Lunch and Learn. We do July 13th. We're going to be talking about the appraisal pitfalls from one of our head people at the mortgage firm that's going to tell you some of the things that can happen. So check it out. That's July 13th at 11:30 via Zoom. All our real estate partners are welcome to join us. So we also have lots of things coming on with WPBA. We are getting back together on July 13th as well. We're doing a happy hour over at Harps and Trinity. Go to WPBA.biz, check it out. You'll see all the information up there. And that's all we got time for.
We appreciate everybody watching. Share us, like us, all that fun stuff. We are Today and Every Day.
Moving forward, have a great week, everybody.
See you next week. Bye-bye.